Hi everyone! As we kick off the new year, it is the perfect time to assess where the market might be heading and develop smart strategies to identify top-performing stocks for your investment portfolio. January is a pivotal month for assessing the stock market and refining your strategy, as it often sets the tone for the year ahead. Known for the January effect, this month offers valuable insights into market trends, investor sentiment, and economic conditions that can shape opportunities for long-term growth. In this video, I'll start by reviewing historical data on January stock market performance. Next, I'll discuss the key factors likely to influence this month's market dynamics. Finally, I'll spotlight two sectors investors should closely watch and share a few top stock picks that could offer promising opportunities for long-term gains. First, the historical data on January market performance. Did you know January is often one of the strongest months for the stock market? Between 1928 and 2023, the S&P 500 has averaged a return of approximately 1.2% in January, compared to an average of 0.7% across all months. This may be due to the fact that institutional investors rebalance their portfolios and retail investors dive into the market with New Year optimism. Of course, there's no guarantee that January will always outperform the other months. In fact, as of yesterday, the first trading day of the year showed a slight decline, with both Tesla and Apple slipping due to reported decline in sales. Additionally, the Atlanta Fed released its updated estimate for the fourth quarter 2024 GDP yesterday, lowering it to 2.6%. from the 3.1% estimate in December, signaling potential cooling in economic growth. This leads us to the key economic factors that are likely to influence the market dynamics in January. First, economic data and inflation. Inflation has been cooling off, but all eyes on two critical data points: the December 2024 jobs reports, scheduled for release on January 10th, and the CPI data set to be published on January 15th. If inflation remains under control, it could boost investor confidence. However, any unexpected results may trigger market volatility. Second, January marks the start of earnings season, typically led by the financial sector, followed by the tech and consumer industries. Key companies to watch this month include Delta Airlines on January 10th, JP Morgan on January 15th, Bank of America on January 16th, Tesla and Procter & Gamble on January 22nd, General Electric on January 23rd, United Airlines on January 27th. These earnings reports will provide valuable insights into holiday season performance, particularly for consumer-focused industries, and offer forward guidance for the new fiscal year. Finally, the Fed's next meeting is scheduled for January 26 to 27. Since Chair Powell used the term uncertain or uncertainty 14 times in the press conference after the December meeting, there is a lot of, uncertainty. Currently, many analysts predict there will be no rate cuts in January. However, nothing is certain. Now, let's move on to the two sectors investors should closely watch in January 2025. First, the tech sector. The AI and automation wave continues to grow, but valuations are high. Look for companies with strong fundamentals and innovative pipelines. With Nvidia's PE ratio at 54, Tesla's at 105, Microsoft at 35, it is wise to say that Alphabet, the parent company of Google, with a PE ratio currently at 25, presents a more reasonable opportunity for investors. A second sector to watch is consumer discretionary. As holiday spending data rolls in, we'll see which brands capitalized on the season. According to a report from the Mastercard Economics Institute, total spending for the holiday shopping period running from November 1 through December 24th rose 3.8% from last year. Growth in online shopping improved by 6.7%, up from the annual holiday spending gain of 6.3% recorded last year, while in-store shopping also improved by 2.9%, up from 2.2% from last year. Retailers with a robust online presence, such as Amazon, have likely benefited from this trend. However, the rise of low-cost e-commerce platforms like Temu have intensified competition, particularly in markets like Europe. This poses potential risks for Amazon in terms of maintaining its e-commerce dominance. That said, Amazon's diversified business model, particularly its highly profitable AWS cloud division, makes it more resilient to the growing pressures in the e-commerce space. Investors should keep an eye on Amazon's ability to balance its e-commerce growth while leveraging its cloud services to drive overall profitability. What are some other key stocks on your watch list for January? And what are your predictions for the market this January? Drop your thoughts in the comments below. And since you've made this far in this video, another pro tip particularly for you. Always remember to diversify your portfolio after conducting thorough analysis and making informed decisions. Check out this video for more details on how to maintain a balanced portfolio tailored to different age groups. Thanks for watching, and I'll see you in the next video.